Hello to all the professional traders of prime risk. Today, I'm going to share an amazing strategy that will help you identify strong market trends and get in on the action right from the start of a price movement. This simple yet powerful indicator gives you an excellent win rate and can bring major changes to your trades. So, if you're ready to learn a new and exciting strategy, stick with me. You've probably seen many different indicators by now, but what sets this one apart is its simplicity and usage, which doesn't confuse you and allows you to trade easily. This is a huge strength of this indicator. We start by going to the TradingView website, searching for NSDT HAMA candles in the Indicators section, and adding the North version to our chart. As mentioned, this indicator is designed for trending markets, and we can use it to identify the start of price movements and ride along with them. You can use it on most symbols, but personally, I use it more on gold and Australian dollar to Canadian dollar. As for the time frames, I prefer higher time frames, but if you're interested in scalping, the 5-minute time frame can also perform very well and show attractive returns. Since the strategy and indicator are based on price movement and trends, to better identify these trends and avoid falling into market traps, it's better to change our view of the chart a little and make it easier to read. That's why I changed the chart to Heikin Ashi candles. This way, the shape and color of the candles are adjusted in a way that makes it much easier to see the market direction, which can be very helpful alongside the indicator. Now, we go into the settings of the HAMA indicator and change the MA line setting to step line. Previously, the MA was displayed as a simple line, but changing it to step helps us see the break and color change of the MA more clearly and accurately, making it easier to spot these changes quickly. That's why we use these settings. Now that we have the chart in Heikin Ashi and the indicator settings adjusted, how do we enter positions? First, we need to let the candles break the MA line with full-bodied, strong moves. For example, when we want to enter a buy position, the candles must break the line from below to above with strength. In the next step, the candle colors must change. For instance, here, the candle colors were initially red, then turned orange, indicating a trend change, and finally changed to green. We also need to ensure that the MA line color changes from red to orange and then to green, confirming that the trend is shifting. Now that the price has broken the MA line with strong candles, we can enter a position after seeing confirmation from candlestick patterns. For example, here, after the break, a pin bar has formed. We can enter a buy position just above this pin bar candle. We can place our stop loss just behind the MA line as it's a safe place and set the take profit at 1.5 times the stop loss. This way, we can enter the buy position. For short positions, we follow the same process. First, we wait for the candle colors to change from green to orange and then to red. Next, we wait for the MA line to break and also pay attention to its color change. Here, after the color change, a pin bar candle has formed, so we wait just below this candle. If the price moves lower, we enter a short position. However, the next candle moves higher and turns yellow. Keep in mind that if the next candle, the one after the orange candle, changes color back to green, we no longer enter a short position. But in this case, we see that the price turns yellow first and then changes back to red. Now, we can enter a short position just below the pin bar candle. We place our stop loss slightly above the MA line and set the take profit at 1.5 times the stop loss. As you can see, since we entered at the beginning of the trend change, the price dropped significantly afterward, hitting even lower targets. In cases like this, we can use a trailing stop to maximize our profits. Trailing the stop loss means that as our position moves into profit, we gradually lower the stop loss along with the price movement. Eventually, the stop loss will be hit with a profit, allowing us to secure more gains. As we mentioned, this indicator is designed for trending markets. So, when the market is ranging, like in this part of the chart, we shouldn't use it. During consolidation, the market doesn't move significantly and instead fluctuates within a range. This causes the indicator's colors to change frequently, leading to many false signals, so be mindful of that. Let's look at another example. The price breaks the MA line from below, and both the candles and the MA line change color, first to orange and then to green. Now we can enter a long position after confirming the candlestick patterns. For example, here a pin bar candle has formed, so we enter just above this candle. The stop loss is placed behind the MA line, and the take profit is set at 1.5 times the stop loss. Our target is beautifully hit, and since the trend is just starting, the price moves even higher, meaning that if we had stayed in the position, we could have gained even more profit. Even though this indicator is quite simple, it still requires backtesting and practice to master. Once you get used to it, you'll see how much it can improve your trades. See you soon.